I got, like I said, I got a lot of stuff going on with my family right now. Like my grandparents and stuff, so I gotta leave the house shortly. So I had to run this earlier than planned, and also Abbott is really sick at home right now, so he can't run the webinar today. I didn't want to change it last second, but it happens sometimes. Um, all right, cool. Let's get right into um some charts here. First things first. I don't know if all of you guys have or haven't yet, but that video I made the other day called like that general rule system video, highly recommend you watch. I'm also going to be making, I mentioned yesterday on the live call, but I'll be making another video, probably depends how my day goes today, but maybe today, most likely tomorrow, of another kind of content idea that are gonna, okay, so basically my whole perspective on things right now is I'm trying to identify what people struggle with the most, and that's what I'm trying to make content around right now. Um, just from my experience, a lot of people get a lot of value from case studies because what you're seeing is the concepts being applied on the charts, right? You're seeing why it worked, why they work, and all this stuff. Um, so, in my opinion, again, from my experience, people get the most value from studies, seeing this the system, the strategy applied um, to real life trades. But another route I'm trying to take right now is kind of identifying what people struggle with the most, and again, trying to build content around that. Um, so you guys kind of strengthen those weaknesses as much as possible. All right. So yeah, keep an eye out in the Discord. I'm going to be trying to record something today or tomorrow. But yeah, should be a good one. But if you guys haven't yet, like I said, please watch that general rule video I made. There's some good stuff in there, probably some stuff that you guys maybe struggle with a bit. So hopefully it brings a little bit more clarity to some of you. Cool. Okay, so the first thing we'll break down is my gold long. Um, my literally only trade of the week, and it's all you need sometimes. Um, honestly, within the last couple months, probably my best trade in a while. Quality wise, pips wise, P&L wise, like it was just a banger trade overall. So let's hit the replay to Wednesday. Cool. Okay, looking at the big perspective right now. Again, this is the most important part when it comes to looking at charts, right? The entries don't have to be perfect. Like I've been trying to dig into your guys' heads lately, is you don't need to have the absolute bottom, you don't need to have the absolute top. Direction is the most important. Okay. So also what I mean by that is let's say you're looking for some sort of longs. Um, you've identified some sort of direction that you want price to move bullish. Okay. Let's say we have um we'll draw it like this. So some of you guys say you have problems identifying like which liquidity block to take or which liquidity needs to go before you take your entry. Um, my best advice to that is you don't always need to find the pitch perfect entry. Okay, so in this example here, we'd identified that we've taken out previous low inducing sellers, grab liquidity from the left-hand side, leaving liquidity at the highs. Okay, so we have a bullish idea right now. We have bullish direction. You want to be looking for buys, but now you need to try and find let's see which liquidity block to take it off of, which liquidity to wait to get taken, all these different things, right? So first thing I can say is took out a high here, okay, inducing buyers, tapped back into the highs to the left-hand side, reacted off it. Okay, so we're looking at this as a trap. Okay. And if we get reactions, it's just going to provide us an opportunity to buy from. So a lot of people um, don't are not too confident to take it off specific lows, meaning you have a low down here, you have another low down here. Let's just say I didn't draw this perfectly, but um, let's say there was a oops, some sort of a liquidity block here. Okay. Some of you guys, let's say price comes down here, prints a high, comes down here. We get a false reaction up to induce buyers. Okay. Takes out previous high, and then price comes down and then takes the low. Okay. I get in specific situations, sometimes price will leave from here and go bullish. In other situations, let's just say time isn't on our side and it needs to go lower a bit, and boom, it goes to the extreme and then goes. Some of you guys won't take the bottom one. Some of you guys will be early and take this one, and then it goes against you. So my best advice is you don't need the bottom, meaning if the RR makes sense, just take the trade off any, not any, but take the trade off some sort of liquidity taken from the left-hand side. Okay, with your stop always covered below the low. And if the RR makes sense, you don't need the bottom. So what this allows you to do, and again, I've mentioned this before in the live calls and the previous webinars, but this allows price to give two situations by you opening up your stop like this, right? Let's say price goes up, and actually respects one more time and goes down to dig for the extreme, and then goes, you don't get stopped out, right? Because your stop loss placement. And the most important thing here is direction. You don't need to have the bottom. You don't need to have that 1 to 10 RR all the time. Okay. Um, but again, by you having your entry here, it allows price to have two different scenarios. So it could go from here and go like this, or price can come down and dig for the extreme, and your stop loss covers this scenario as well. Does this make sense? As time goes on as well, as you become more experienced, you'll be able to have better entries over time. But for now, for the people trying to find that consistency still, all you have to do is just open up your stop loss a bit more. In a bullish scenario, literally all you have to do sometimes in a bullish scenario is wait for some sort of low to get taken and make sure your entry is at a liquidity block. Make sure your stop is below that liquidity block and then just take that entry. Most of the time, these will be winning trades. Okay, I promise you. If your direction's correct, all you need is a run on liquidity on the opposite direction, a tap into a liquidity block, and that's your entry, period. Okay? And then on the flip side, say, just the opposite for sells. Wait for some sort of high to get taken with a liquidity block supporting your entry, take the sell. Okay? And that's how you just keep it as simple as possible sometimes. Um, but does this make sense to you guys? Making sure you open up your stop sometimes and allowing price to play out in two different scenarios. Again, sometimes price will go from here, but let's just say time wasn't on our side or it needed more liquidity. It can come down here as well. Okay, so it can hunt for that extreme and then mitigate this liquidity block and then go. Okay, but yeah, I just want to dig this into your head. Again, over time you'll build more confidence, and let's just say you're able to risk 1.5% on this trade. So it won't end up being a 3.7% trade. It'll be a little bit more. All right. So again, just because your RR smaller does not mean you're going to be making less money. You'll be winning more. Your strike rate will be higher. But not only that, in due time, the more confidence you have, you can slowly scale more risk into your entries as well. Okay. So those 1 to 3 or the 1 to 4s can end up being 5-6% trades. All right. But yeah, something to keep in mind. All right. And that's my best tip for you. It'll help you a lot. Starting off on gold here. Beginning in December, we had this big sell-off to the downside. Okay, and we spoke about this many times. We talked about how we had this buildup of liquidity here, this whole ranging price action. Then we got this big bullish move up, taking out structural point, inducing buyers. Look how it induces buyers here by taking out this high and then fuels that sell-off down to the downside, okay, to trap all the buyers out. Perfect. And then respects this liquidity block down here, higher time frame. Okay, I believe it digs into. You can see on the on a little more refined perspective. Boom, taps into a liquidity block down there, and then from then on, prints that low. This is mid-December coming into Christmas, and then just struggles for Christmas time because again, dead price action. Look how it just induces sellers the whole time though. What do I mean by that? We bump our heads into this area here and trade within it for a while, right? Once, twice, three times, false sell off to the downside. Like same thing over and over, right? False reaction from some sort of trap to the left to induce sellers, even gives them their break of structures, taking out lows to the left hand side, mitigates something from the left, and continues higher, right? Same thing over and over. From there, we continue going higher, take out some internal from the left, pull back to the downside. This was actually clean as well, and we'll discuss why quick. We induce buyers by taking out this high. What do I mean by that? Where did this reaction come from? Look, if I just mark out this whole area for you, drag it over to the right, false reaction up to induce buyers, right? They get their BOS in the market, and then we get a sell off to trap them. Taps into, I believe, some sort of liquidity block here. I can just mark it, this whole area out. But taps into this and then goes bullish again, right? So here's the trap here. Building liquidity at this low, taking it out, and then allowing price to move higher, continuing all the way to the upside. All right, so now we're approaching the highs. As we know, since we've taken out lows down here, this low over here, all these things, retail, pattern traders, all these traders look at this as BOS to the downside, momentum to the downside. So they're going to be looking at continuations, meaning when price comes into these areas, they want to be selling. So look how we take out this inducement high. I told you guys in the last webinar, don't be looking for buys after this takes out. We can expect bearish price action to occur, and that's exactly what happened. We had some bearish PA to the downside to hunt for some more internal. Perfect. Same thing. We've taken out lows. Okay, we're in bullish environment right now. We've taken out lows, meaning sellers induced. So what can we anticipate when they come back when we come back to the high? False reactions. Same thing over and over. Went to the 15-minute. So these are my favorite trades. Honestly, the ones I'm most comfortable taking, the ones I usually tend to add more risk on too. So that's why this one was a very beautiful trade for me. Again, quality, pips wise, I only took 50%. I only took 50% at the highs. So I was able to hold 50% of my volume to 400 and like 20, 430 pips, I believe. So it ended up being a large amount of gain for me, which was nice. But yeah, these are my favorite trades. I call these the Da Vinci. So if you guys haven't watched that video yet in the WAP, please go watch it. But false reaction down, taking out lows here, taking out lows here, inducing sellers into the market, mitigating this whole area here is a liquidity block, right? So on the higher time frames, it's probably like a 4 hour or whatever it is. So you can mark it out the whole box like this, or sometimes what I do is just to clean up the charts and just keep it as simple as possible. I'll just put a line here. But it's up to you. Take it like that. Let's see. Is there any other liquidity blocks on the left-hand side here that we could refine to? Actually, even before we do that, check out the time here. Perfect. So look on my crosshair right now. I always tell you guys to keep an eye on what's up other not PC, but failing no worries, bro. Keep an eye on the my crosshair. Look at the bottom. What time is that? 9 a.m. And I always tell you to keep an eye in between 9 and 10 a.m. because usually that tends to be trap hour, some sort of run on liquidity. And look what happens here. When everything aligns, like these are the trades that like I'm so confident in. It's so much easier to take. There we go. So look at literally to the minute. We print that high at 9 a.m. Mitigate something, actually even look on the left-hand side. It's 5 minute liquidity block. But tap something on the left-hand side. This is not a sell I'm interested in. I'll just let the sell-off occur. Doesn't matter. Big sell-off down. What's the purpose of it? Literally just sweeping out buyers, taking out internal, inducing sellers at the same time. Okay. So we can mark that on actually. Here we go. So we trap the buyers. So 9 o'clock opens up, big sell off, grabbing liquidity to the downside, tapping into higher time frame liquidity block on a refined level. I don't really see a liquidity block. You can really take it from the left hand side. If you were to take it from the left, you'd have to basically cover the whole low. Okay, so you'd have to have a 90 pip stop, which is quite big. This would have to be like a higher time frame entry because your target would have to just for 1 to 3, you'd be looking at right here. Which don't get me wrong, it's not bad at all. These work. Just remember that essentially we're taking our entries off liquidity blocks. So the size of the liquidity block determines the size of our stop loss, essentially. Right. So sometimes the market builds a small liquidity block, sometimes it's a bigger liquidity block. It's all situational, right? So we have to take what we can get. Um, but yeah, check this out. So 9 a.m. opens up, big sell off down. 9:30 stock open. We have a little pullback. And look how price waits, literally waits for 10 a.m. 10 a.m. finally opens up, sweeps 9 a.m. low. So look, if I put two lines like this, boom, boom. Look how we weren't ready to go yet here at this point at 9:35. We printed this low. We ran the liquidity, but it wasn't time yet. Price waited for time, right? And then 10 a.m. opens up, sweeps 9 a.m. out. Okay. Again, we're still trading within this whole liquidity block. Don't forget. Okay. And then we start building this lower time frame entry, which we'll cover right now. And this is where I want you guys to pay attention because everybody's different when it comes to taking entries. Some people want to get the bottoms. Some people don't care about the bottoms. Some people are okay with taking one, two, maybe even three L's before a big win. Um, but this is when you have to find what suits you, what works for you. All right. So look how we get a sell off to the downside. Now look here on the lower time frames. We've literally left equal highs, relative equal highs. Okay. We've induced sellers by taking out this low. So what you have to understand is if we get reactions here, keep in mind the whole bigger picture, right? We want price to move higher. We are scoping out longs. Okay. We had a big sell-off in a higher time frame bullish environment. Okay, so everything's telling us we want price higher, right? On the lower time frames now, we get a sell-off down, taking out lows. Price pulls back to the high, and we get a reaction off the high. This is gonna be false. Okay. This is just respecting liquidity, building liquidity. Okay. And look at the nature of price action on the way down, building liquidity for you. Okay. You have inducement low down here that it hunts for, mitigating that extreme. Now, do you need to take an entry at this very bottom here, like this? Sure, it looks pretty. Looks pretty freaking cool having a 7 pip stop loss on gold, right? And having a 27R tool drawn in a chart. It looks pretty as hell. But is it realistic to be catching these? No. Like, and do you need to? No. So what I did was I understood that my stop loss was going to be super small, just taking an entry like this. So what I told myself was I'm simply just going to wait for a reaction. And I believe actually I took it like this. So price stabbed in at 954. Okay, and I waited for look at this bullish candle here, 1055, or sorry, not 954, 1054. And then bullish candle here. So literally right here, price closed like this. I was like, cool, that's fine. I'll just take it like this now. Um, Stop loss is still always going to be covered behind underneath this liquidity block. Okay, by you having your stop loss here only allows price to give you one scenario now, and that is a pullback and a continuation. Okay. By me keeping my stop loss, by me keeping my stop loss below this low allows price to give me two scenarios now. So automatically increases the probabilities. You see what I mean? So it can go like this, go higher, and induce lower once more, and then go. Okay. Again, if my stop loss was just covered below this low, it only gives me one scenario. And if it comes down like this, goes higher, and then stops me out, and let's say it kind of does my head in, and then guess what? It runs. So your direction was perfect, but your entries are just over refined, right? I took as soon as the M1 small trap was taken. Yeah, that's fine as well. This is how I took it. Um, as soon as we closed bullish like this, I took it, and targets are going to be keyboard's not working. Boom. First target. Why is this my first target? Look at the reaction. Sellers are entering the market right here, literally right here. Why? We've taken out lows coming off the back of a false reaction, or sorry, smart money trap. So smart money looks at this as from A to B, they see BOS here. Okay. They're going to be wanting to sell this area, and the market gives them their reaction. So guess what? They're going to be selling this area as well. And we understand that we can target all of their liquidity. So again, first target's going to be up here. Okay. Once price gives me a nice reaction to the highs, once we're trading up here, I'm going to be managing my position, meaning you can close partials, don't get me wrong. Like you can partial out at the inducement high up here. But since I was so confident in my direction, it was obvious in my eyes. I'm holding to here, and then we go on the higher time frames. This is going to be the next target. Okay. Or inducement high, one or the other. In this scenario here, inducement high is literally it's gold. So like it's still 50-ish pips in between the inducement high and the structural high, which is quite a bit, but and honestly in gold it's not. Look from our entry down here. You're looking at 420 pips. Okay, which is mental. Something else to talk about that in a minute, but let's continue on with the trade here. Entry right here. Again, you don't need the most pitch perfect entry. Get it out of your head that you don't need that. Price goes down. Look, it induces lower once more, and look at that reaction up. Perfect. That's fine. Respects the highs temporarily. Again, anticipate these things. This is some sort of a liquidity block in the lower time frame, so price can struggle here to induce sellers. We squeeze, 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 and then Asia opens up, I believe, and we move higher. Partial point right here. That's 180 pips. Now, let's talk about something for a second here. Some people have messaged me privately and asked me why I don't take scalps, why I don't really take intraday trades that much no more. Reason being is because this is just for me. You guys can be completely different. Okay, I'll give you my perspective, and then you guys take it how it is. I don't like involving myself in the smaller moves too much. What that allows me to do is I like to be in the bigger moves. Okay, meaning all I have to do is I don't have to add too much risk to my position. So, example, gold here moved 180 pips to my first partial point. So let's say I opened up, I had 3 lots running on this. 18 times 3 is, oh, I'm going to start doing math here. What the hell is 18 times 3? Bear with me right here. 54. So I would be floating 5,400 at this high here, and that's with 3 lots. Okay, and that's the power of catching bigger moves is I can add smaller risk, smaller volume to the bigger moves. Now, if I was catching smaller moves, I'd have to add more risk in order for the P&L to be relatively the same. Okay, see what I'm getting at? So I trade less, but I catch the bigger moves with smaller risk. There's no stress in my head. Like I have no pressure because when I'm entering these trades, I have such small risk, such smaller volume, kind of relative to like what other people take. Um, but my profits are big because I'm catching the bigger moves. So it's just something that I like personally. I'm more of a low risk trader as it is. I like to catch the bigger moves with smaller volume. But since the moves are quite big, the profits are still massive, right? So for example, 3 lots on this trade right here on gold is to 108 pips. I'm floating 5,400 right here. Okay. And let's say I close, honestly, let's just make this easier. Let's just do 2 lots, just to keep my math a little more simple. Um, 1,800 times 2, 3,600. So I'm floating $3,600 right here. I close 50%. Okay. So I pay myself 1,800. Now, my second target. Let's just hold it to this inducement high up here. Now I'm floating 4,100 on a single lot. This is one lot, okay? And I'm still up $4,100 on a single lot. I don't need to have five lots open. I don't need to have 10 lots open to make good money. You can still make money with small lots as long as you're catching the higher time frame moves. Um, but yeah, up here floating another $4,100 with one lot. Like you're laughing. Close out here for $4,100 and then you still partial over here for 1,800. You've made what? 48 plus, or sorry, 41 plus 18, almost 6K from two lots. You don't need, again, you don't need to have the big volume to make good money. But yeah, ends up in running inducement high. We're still going to continue higher. This reaction from the highs is just going to build more liquidity. So if I had to predict where we're going now, honestly, we just had a trap here. So price can move higher. We'll see where it goes. But I'm already out of my position, honestly. Once I reached up here and I was floating 4,100, or when I was floating 410, 420 pips, I was more than happy to partial. It's funny because we actually, as soon as I partialed or closed my position, we had the false reaction down. So, um, yeah, my only trade of the week and a banger trade. So you take these when you can get them. Any questions? Any questions? But yeah, so find out what works for you guys. I don't like to catch the smaller moves because that means I need to add more risk, and when I'm adding more risk, I tend to be a little bit more emotional, a little more stressful, more pressure. So that's why I don't really scalp slash intraday. I like to catch those bigger moves. So I yes, I sit on my hands a little more often than most people, but when my trades come along, um, the profits tend to be a lot bigger, right? And I found my strike rate stays a lot higher trading like this as well. It's just a lot more of a peaceful, easy kind of trading in my eyes, at least. Some people are okay with taking scalps and intradays. Again, you just got to find what works for you, right? All good. I closed my trade too early, missed the bigger picture. No worries, man. That's fine. I always recommend to leave a partial, especially if you're trading gold, because if gold runs, there's a lot of pips. So let's just say you even have half a lot open. Literally, think about this. Just half a lot to this. You're up 2 grand still on 0.5. Just think about that. So it's worth it sometimes to just leave a runner, BE it, and forget about it. All right. So yeah, that was gold. Ended up being a banger. Let's see what gold looks like on the higher time frames now. So close out the week with from low to high, we've moved almost 670 pips. Still respecting the high, so we can mark this out. Let's go to the daily. The daily, ugly right now. What can happen, honestly, since we've left Friday low, we can come back, maybe take Friday low out and continue higher. It's not impossible. On a intraday perspective, we have taken out a high here, grab the liquidity from the left-hand side. So I am bullish on gold, but also we are trading at the higher time frame extreme right now. So I don't mind waiting for price to play out a bit more. Um, but yeah, it's not impossible. For example, we come up, maybe take out this high, induce buyers, come down more to trap them, grab Friday's low, and then maybe we start moving bullish from there. Okay, so just something to keep an eye on gold. But yeah, I do believe we will continue running higher back to the highs sooner or later. All right. Um, yeah, that was gold. Clean stuff. Euro yesterday was clean as well, which we'll discuss. There was also a decent short on Wednesday. Some people took in the group, which was nice. Excuse me. Let's go to actually let's take a look at this short. Cool. So mark this out. Build up of liquidity. Look to the left-hand side. What are we building up at? These highs to the left. Okay, these relative equals, or equal highs, however you want to look at it. We get that build up Tuesday late New York, all the way into Wednesday New York. So basically, all of Asia, all of London built liquidity. Look at this price action. Right? Imagine trying to include yourself in this. when you're looking at this PA, all you got to do is literally say, cool. If we go long, or sorry, if we go short, we can take a long here. Okay. Or if we go long and leave this liquidity, you can maybe look for shorts over here. And I actually didn't see this. Somebody pointed this out to me, but there was even a liquidity block up here that we came into. I didn't even notice at the moment, but build up, build up, run on liquidity to the left-hand side, liquidity block over here. Actually, again, I didn't even see this, but ends up being really, really clean. Literally could have just taken an entry off the 1 hour like this and stop above liquidity block, back down to the lows. H1 entry, and you're still looking at over a 1 to 5 RR trade. Even if you want to take an entry a little bit earlier, look at this. You're still able to catch a 1 to 3 just off an H1 entry. So entry from the left-hand side was valid. Again, unfortunately, I didn't see it at the moment, but that was valid. Not only that, I believe there was confirmation entries given out that some people took in the group. So let's take a look at this. Cool. So mitigation, that liquidity block came after news, printed that high. Okay. We get a reaction down to the low. From this low, we trade higher, mitigate the extreme. Okay. Then we trade lower. Look how we build liquidity here. Okay. We get reactions at the low down here. Let's mark all this out so we can make sense of it. Okay. We get reactions at this low down here. Look how we get some sort of structure built for retail. Look high, low, and then we take out high here, inducing buyers. All right. We even get a pullback down again, mitigating something over here, and then we trade higher to take out internal. And what does that now do? This has now built a liquidity block for us. So what do we know about liquidity blocks? Is we can now take an entry off this area if we have liquidity built below it. And look what we get here. Again, this is M1, and M1 tends to kind of be the time frame to use after news, which it is what it is. Sometimes it happens, sometimes it doesn't. But in this example here, yes, you'd have to be on M1 to look at this entry. This price action right here, I'm just going to draw it out in a diagram for you guys so you can kind of see what I mean by it. This is what this looks like. Okay. Entry. And to be honest, this should be a little bit lower because we actually didn't take out lows. We built liquidity here, right? Look at we built liquidity here. And then you get 1 minute build up here, early sellers, and then you get a false reaction up. Retail sees this as BOS. We understand that. If there's going to be reactions down at the lows once more, this is going to be a trap. Okay. Anywhere above this high here is going to be a sell. Okay. Because it's supported by our liquidity block. So you take the entry just like this. Stop loss here. Let's open it up for spread and target. Just like that. Any questions? No, all clear. But this is all you need sometimes, guys. Again, we spend a little bit of time on entries, but the important part here is just direction. Okay. Massive buildup of liquidity. Okay. News induces higher here, right? Induces higher. Takes out all these highs, yes, which is important. But the biggest and most important thing to be looking at here is we've grabbed liquidity from the left-hand side. Okay. This is where sellers were being induced from. If I can draw this. Jesus. Okay. As resistance, SMC traps, whatever it is, right? Because we've taken out this low. Pattern traders, retail traders are going to see this just as the same old pattern of break to the downside. These are going to be areas they want to be selling from. Okay, maybe an imbalance up here, they refined it up here, whatever it is, they want to be selling from these regions. Okay. So you can sell right back into those lows once these highs are taken out. And again, I wish I saw this at the in live time, but yes, there was actually a liquidity box on the left hand side too, which was gorgeous. Um, you could have taken it. Let's see on the lower time frames what it looks like here. Um, the imbalance on the lower time frame started right here, but sometimes you don't even need to refine it that much. Let's see what it looks like on the other time frames. 30-minute was right like this. So you had a couple different options, and then I think 1 hour looked good as well. Yeah. So a couple different options, it's however you wanted to take it. But again, entry from the left worked. Team, I need to go have a good day. You as well, brother. Entry from the left worked, and confirmation worked. So multiple entries you could have taken. Um, good stuff. Then yesterday, some people took this. These trades are a little bit harder sometimes for some people, but again, you're never going to know 100% where the trade's going to be going. All you need to know is, did we take liquidity? If you're bullish and you want price higher, did we take liquidity to the downside? And is there liquidity resting to the upside for us to target? Okay. And also making sure you take an entry out of liquidity block. Okay. Um, Important part here, and we mentioned this in the live call, is we've grabbed liquidity from this high. So we need to see price back down to this low if you want to be taking long at the minimum. Okay. Then look to the left hand side. That's where this reaction came from. So mark this low from the left. Now, this gives actually a good perspective from what we talked about at the beginning. You don't need the absolute bottom. So let's see if this works out RR wise. Look how we have some sort of a liquidity block right here. Okay. And then there's also the one at the extreme. Okay. So obviously, with the benefit of hindsight, we know which one worked. But if we didn't, let's see. What if you took entries off this low here with stop loss below the bottom? Look how you could have still got a 1 to 3. Okay. And again, this allows price to play out in two scenarios. Okay. If you are the type of person that doesn't want to be seeing too much losses, that you don't really like to see maybe two L's before you see a win, then you maybe want to be rethinking how you take entries and maybe take entries like this. Okay. If the RR makes sense, then you don't need to catch the absolute bottom. Of course, price ends up hunting for this low. So yes, RR would have been bigger, but if you took it like this, you would have taken just one trade, one W, and a 1 to 3 right to your target. Okay. Now, if you're the type of trader that you're okay to take an L here and there before your win, that's fine. Then maybe you take it here, you take a loss, and then price takes you out, and maybe you're okay with still taking one more entry down here. That's fine as well. So you have -1R on this, and then you have 6R back up here. Okay. But the problem is some people aren't okay with this. So what happens is some traders will take the first one, take the L. Okay. Then they get in down here. Price starts flying, and that's all good, but they don't hold to their target because they're like, oh, I lost 1% or whatever. I lost 1R on the previous one, so I'm going to partial out a little bit earlier. Now the numbers game, you're not playing with it properly because this trader isn't okay with taking too many L's before the win. So they're not letting their winners run to their targets, right? Because they're letting the first L get them a little bit emotional, which lets them influence how they manage their second position. Okay. So again, this is when you guys have to figure out what works for you. Okay. If you're okay with taking an L before your W, you're okay with a little bit of red on your history, then that's fine. Take two trades here, take one L, and then take your W. Now, again, if trader B doesn't like that, then take this entry with your stop loss covering all the way at the low. If the RR makes sense, take it. All right. Um, I just like how I spoke about in the gold trade. Some people like to wait for some sort of rejection. So look how price Comes down to low down here, 920. We get some sort of bullish PA up. There's no really like bullish engulfing. So the bullish engulfing would have happened right here. Replay right like right here. You see this bullish engulfing we got. So maybe you wait for that. Take the entry like this. Again, you don't put your stop loss below this low. You put your stop loss below the liquidity block to the left hand side. So just like this. Okay. And again, what does that do? This allows price two scenarios. If price wants to induce lower once more, your stop loss covers that scenario. If price wants to just have a pullback, respect this area and go long, even better. That's fine. You barely see any drawdown. Okay. But making sure your stop loss is in that proper area is the important part. Don't get greedy and think, okay, this is going to be the absolute low on M1, the absolute bottom, because you'll take a lot of L's doing that and it'll do your head in. Um, you taking trades like this, and let's just say it comes down, spikes you out, and then runs. You just did so much hard work to catch the proper direction to take this trade, and then you just had a really greedy stop loss, and now you're not even in the trade and it runs without you. Okay. Um, but yeah, again, please find out what works for you and see what you like. Ends up being a clean long back to the highs to take out this liquidity, and I believe takes out that liquidity, mitigates. Look at this. M5 liquidity block and back down to the lows. Believe probably this is gonna be the next destination. Boom. And actually, let's mark it out like this. So induce some low taken to induce sellers. And then comes back out, traps the sellers, taps liquidity block, and now it's going to hunt for that resting liquidity on the opposite side. All right. And I believe to the lows as well. Yeah, to the left, sorry. We have more liquidity. All right. So what can we anticipate right now? If there are reactions down here, what will this do? False. Yes. False moves. And if we get reactions down here, that means we are just going to be building liquidity and it'll provide us another opportunity to sell. Exactly. Build liquidity. Thank you. All right. Any questions on Euro? Was there any more opportunity? I believe some people took some longs on Monday. We discussed that earlier in the week. I believe that's it. Yeah. So the sell on Wednesday was nice. Long yesterday was doable. Even honestly, if you wanted to take this, this could have worked as well. I believe timing. No, timing was still fine. It was still 10 a.m. Just getting late on a Friday, is iffy sometimes, right? I'm not really bothered to take trades late on a Friday before weekend close. But again, still makes sense. Comes all the way to the extreme here on M5, like this. Taps it and back down. It's good stuff. Um, any questions, guys? Oh, nope. No questions. Talk to me, Matthias. What's up? Do you take trades on Asia if there is higher time frame ability being taken? The only time I've really ever taken, and it hasn't been for a while, but the only times I ever did take trades in Asia in the past was higher time frames. So like if I was on EU, my stop would probably be like 10 to 15 pips big. Higher time frames and limits, but that's it. That is it. But that's it. Yeah, that's the only time I ever take any entries in Asia. Other than that, always in New York. Always. All right. But yeah, I'm never sitting on the screen Asia. And that's something like I want to stress to you guys is like if price is not in your trading hours, don't even bother looking at the charts to do your head in. Hop on the charts when it's time to trade. That's it. All right. Any other questions, guys? These are your time. This is your time to ask questions. Crickets, crickets, crickets. Chirp, chirp, chirp. All right. Well, I'm gonna wrap it up here then for the weekend. I'll see you guys Monday. Live call on Monday for sure. Um, I am leaving for I'm going to see Riz in Miami. He has a bunch of podcasts he's finishing up next week in Miami on Tuesday. I'm flying out. So I don't know how active I'll be throughout the week. Oh shit, Monday's the bank holiday. Oh my God, what a buzzkill. Oh, because I wanted to run a live call Monday. Yeah, that's annoying. Um, I'll figure something out. I don't know. Maybe Elijah will help out and get a live call in. Elijah, how you feeling for a live call? Maybe Friday again if you're down. I don't know if he's in right now. If he can hear us. Maybe he's sleeping. Whatever it is, I'll try and sort something out, guys. I'm flying out Tuesday morning. Riz has a bunch of podcasts in Miami, so I'm meeting him out there, helping out with some things over there, and then I'm flying back home on the weekend. So I'm only there for a couple of days. I'll be active in the Discord, of course, but I won't be able to really run live calls. I won't be able to. Um, Maybe Abid or Elijah. We'll see. But yeah. All right, guys, that's gonna be it for me today. Um, I will sort some things out and send a message in the Discord next week to sort out some live calls, but we'll see. And yeah, for the content piece, I'm gonna try and record today or tomorrow. So keep an eye on the Discord, and I'll let you guys know when I have that uploaded, so you guys can give that a watch. All right? Yes, sir. You as well. Have a good weekend. And yes, no trading on Monday, guys. Obviously, bank holiday. We'll talk soon. Take it easy.